Good morning, my free folk. And it's Friday, and I don't think it's going to be any less painful a day. But quickly, we take a quick look over here, and all we got today is personal income, personal spending, and the forecast is a little higher than the previous, but it would, although the personal spending looks to be anticipated to come down some. So those numbers being bad would be good for investment because it would just show that even as the Fed speak, it's having an effect on the market. It's achieving their goals. Interest rates are edging up a little bit. Um, the wealth factor of money made in the market is slowing or actually inhibited. I mean, the market comes down 10%. A lot of people are going to pull back on the purse strings, um, and not spend as much. So, yeah, that's what we want to see. We want to see people slow down their spending a little bit. Um, ease up on supply demand, and obviously we want to see shipping pick up and get organized. And our idiot president took no action. These guys are quick to put together commissions to look at who's grabbing whose vagina, but they don't make any move to make any resolution to the country or pressure the oil industry to pump out more oil. I mean, you know, Trump, who was the axis of evil, every time we had a problem, he got involved. He knew what the country needed, and what we need is a good economic machine and to keep growing. And we're a capitalist society, but we have these bleeding hearts in there who are tantamount to communism. So this is my view, but I'm not all about the righteous either. The righteous Republican who, wants to dictate what women can do with their bodies and things like that. Also, so I guess I'm kind of a moderate. So anyway, enough of my political views. This is the news we're looking at today. Monday, relatively quiet day, and Tuesday, ISM manufacturing. We want to see that hot because more manufacturing, more product, cheaper prices, and job openings. We could start seeing that slow. We wouldn't mind seeing that slow to take a little pressure off of labor costs and ease up a little bit on that. And it's not about the poor have a right to earn money, because I do believe that the minimum wage should be about $15 an hour. I don't think that anybody is surviving on $7 an hour. And I mean, I've seen it firsthand. I talk with the deli counter guys and girls, and I'm a big ass flirt, so I'm always flirting with just about anybody who walks past me. I know a lot of these girls who work at the supermarkets and stuff like that. They're working 60 days, 60 hours a week, and they were getting minimum wage, and they were getting food stamps, and net, man, they're starving. They can't feed their children, and that's just not right in first world country. You know what I'm saying? I mean, if you're trading your time, and you're trading your life, which is our one true precious resource, time. It's the one thing we're never going to get back. And if they're going to trade that, at the very least, they should have good health care, and good housing and food on the table. They're contributors to our society and to our economy, and they're hurting. It just doesn't make sense, man. It doesn't make sense where you work 60 hours a week and you still need food stamps. And this is not a greedy thing, man. If you do the numbers on it, you need food stamps, and this is before inflation. I mean, this I was I mean, I've been looking at this situation for at least 5 years. Since I retired from the brokerage firm and became aware of what was going on around my ivory tower. Not that I'm a great humanitarian or anything, but I mean, I was just detached, and now I know. I mean, I didn't know what bread cost. Now I know, and it's just a pity. It's a pity. Um, so 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 anyway, that's that in the news. Here is CNBC, and it's funny. There's never anything to read in CNBC anymore. Robinhood took a beating. Who'd have thought, right? Their one source of revenue, which is remuneration for order flow, and the SEC is going after that, slowing down, and everybody was at home trading, having a good time. They had that extra cash, the stimulus money, and these guys did phenomenal. And then that dried up, and these guys are taking a beating. So it's going to be interesting to see what they do, because the brokerage business is a rough business. I mean, it's one of the most heavily regulated industries in the country, and if you don't have a diverse stream of revenue, you're I mean, all you have to do is wait, and that revenue stream will dry up or be regulated. Um, and I think these guys, their only stream of revenue is order flow. So basically, they give their orders to other trading firms to trade, and the trading firm will pay them like a penny on penny a share to half a cent a share. I don't know what the rate is these days. But I mean, I used to do that too with my firm. I would direct order flow for payment, but I also had traders, I had proprietary accounts, and I had a retail end, and I had an investment banking end. I mean, we had different sources of revenue, and yet the regulators are constantly chopping at your sources of revenue. I mean, they're beating the hell out of you over your commission charges and your service fees and everything. It's ridiculous, because you have a bunch of Democrats who are 9 to 5ers in these regulatory positions, and yet they don't believe that you should get rich on your efforts here in America. Bunch of liberals, I should say. I don't know if they're Democrats, but I know they're pretty liberal in that thought. And it's interesting how you have these these 9 to 5ers who really have no interest in business or anything. They just want a paycheck and go home, and you have them regulating industry. I mean, it's silly. So anyway, talking about, there's really nothing out there. Kramer kicking his feet. China's new rules on Hong Kong security regulators. I don't know. These guys are assing themselves out of the system. It seems like everything that brought them to power, they are pissing all over. I mean, and you know what? The American people deserve whatever they get, because we keep buying Apple products, and we keep buying Tesla products, and we keep supporting the very people who are causing the problems. I mean, we don't want to cut off supply chains to Russia. Whatever it takes, figure out a way to accommodate Europe as far as their energy needs, and squash Russia. That's it. Squash it. That's it. We're not buying your shit anymore. You guys, just whack off some of that polar bear leg, pour a little motor oil over it, and eat that, sucker. Stop importing to them and stop exporting from them, and let them survive on their own resources, and see how tough they are. We are actually fueling these guys. We're fueling these guys and the Chinese. We're fueling them. It's our money they use to fight us. I mean, enough's enough. It's agony. Rising mortgage rates, tight supply. It's agony. So don't buy now. Now's not the time to buy. All right, I'm not going through the news anymore. You guys don't want to hear me bitch about the news, right? If you do want to hear me bitch about the news, leave it in the comments, and I'll make that a larger part of my repertoire. Otherwise, look, we're looking at the market right here. Just looking at the dailies. I don't know, man. I'm just not feeling good. This is a daily bear flag. I think we may have another 10% leg down. Where are we right now? Futures are at 308. So we're down about $10. We're gonna open below the close. We trigger this, and that's it. It's a flag. It's a bull flag, and we're either testing this low once again, which wouldn't be bad. We came down, test the low, and turn around. That wouldn't be bad. You can see the momentum easing up, right? It's not as aggressive as it was right here. You want to see that momentum easing up, and then we could be ready for the bounce. And the bounce could be as high as 45, 43. But I don't know, man. I'm fearing that we just take another leg down. We get a lot of the naysayers in. CNBC starts pumping some negative news, and we're pushing this bad boy down. That's a little frightening. So that's what we're watching for. That's the focus of my day. If we look at the 10-year, what's the 10-year telling us? This actually looks like a sell-off pattern to me on the 30-minute and on the 60-minute. you obviously have a roll around on. Oh, that's 15 minute. I thought it was 120. All right, so we'll just jump to the daily. On the daily, we have this inside bar. We could call this a bull flag, and if it breaks the high, it's going to rip, but it's an inside bar, so we're going to have to watch to see which way it goes. See, on a bull flag, you want to see it open low and close high, just like this bar did. It opened here and closed up here. You don't want to see all of this. That's a lot of uncertainty. So when you see this strong bar, if we had 1, 2, 3 strong bars that look like this, you would call that a real good bull flag. And then we get the retrace right here, and then the next move, boom, it breaks that and starts running up. This is the test of the bull flag, and if it's a good strong bull flag, it's going to tag this, probably consolidate a wee bit, and then keep running. So we'll watch that on the 10-year. That baby keeps running. The other end is, oh, that's not what I'm looking for. The other end is that the SPX keeps pushing down. So here on the SPX, just to, yes, Sister Zen Fanny. On the SPX, good strong bar down, good strong bar down, good strong bar down, good strong bar down. Then we get a little sloppy, but it's still a lot of momentum. And then, we go into this decent consolidation. So this is a pretty good bear flag. I mean, this bar kind of makes you wonder. You can count it as part of the consolidation. If this bar closed down here and we consolidated, I'd be more apt to say that this is a run to the next 10% down, which is about 385. Or 3,850 rather. So yeah, 3,850. So there's a good chance we bounce off of this, but I'm just not feeling good about it. I'm really not feeling good about it. So anyway, that's it. This could be my lookout below video. So everybody just stay calm and cool. Look for your the other thing, Apple. Okay, so Apple came in yesterday, last night. Looked pretty good. They're going forward. They didn't give going forward guidance, except for the quarter that they're in. So I mean, that's everybody's fear of supply chain. And technically or tactically, companies like to come in light so that they look good when the numbers come in and they pop their shares. And yet, the CEO's job is to create shareholder wealth. So they'll come in and they'll give you a positive going forward, but they'll pull in the reins a little bit. They won't tell you that how good everything is, but they're going to tell you everything's good. So, but now a lot of companies are refusing to do that because of supply chain issues. So they may very well see an easing, but they don't want to, put that out there in the event that something gets hung up and they come in light, and then the investor beats the shit out of their stock. So they back off on that. But he said the quarter's doing well, and it's hitting expectations, and they're probably going to do better, quarter over quarter and year over year. But he wouldn't give a forecast going out to 2023. But as far as what they did, I mean, their iPhone sales were better than expected. Their iPad sales missed expectation, came in a little light, but the iPhone sales exceeded. Their watches and stuff, I believe, exceeded by a little bit, and the Macs, the Mac books, they did well too. So iPad's kind of fading off. That's interesting. So the tablet is losing a little bit of footing, but phones are so big that who the hell needs a tablet? I'm sure there's a use for them, but not as readily as now. I mean, my phone is huge, and I can comfortably do things. And I'm old as fuck, so um, if I could see the phone and use it, then everybody can. Wow, I can't believe it. All right. So, and anyway, that's the deal with Apple. So, you know what, man? Buy Apple on the dips. Don't. It's not a trading stock for me. I mean, it moves 5 points. I buy, 1,000 shares. I make $5,000, and that's not trading. I've got to tie up $164,000 to make $5,000. I mean, it's not a trading vehicle for me. But so like I do SPX, and I tie up maybe $500, and I can pick up 9. You know, well, no, that's not true. Really, I tie up $5,000 and pick up $900. So I mean that makes more sense to me than tying up 164,000. And I mean the movements are subtle, so the options movements are subtle. I mean, there's guys out there I know who trade that and they do well. They know the stock, and I mean, if you're making money, you're making money. That's it. That's the bottom line. You don't need to trade everything. But for me, it's just not a trading vehicle, but an investment vehicle. Excellent company, man. And you got to love these pullbacks, because I mean, you just want to buy this shit cheap. Actually, the first stock I ever bought, and I had no intentions of being a stockbroker, but I just thought it was a good idea. It was IBM, and there was something. I was in the 80s, and something was going on. It got really cheap, and I asked my mom to buy me a couple of shares, and she did. She did, and it was a good move. But it was during some debacle, probably a Carter era, Jimmy Carter. Well, I don't know if you guys know that clown, but the world did to him what they're doing to Biden. But it was Iran who beat the crap out of Carter. All right. Anyway, good luck today trading. Have fun. Let me know what you think about the rants in the comments. Subscribe, hit the bell, hit the like. Follow me on Twitter at trading_off. Hopefully I get some trades off today. And good luck in the market.